Report after report, news article after news article, everything seemed to suggest that the U.S. economy slowed down in third quarter 2011. But what about the U.S. apartment sector? Did we see momentum slow down there as well? We're going to discuss that. I'm Jay Parsons, and I'm joined with Greg Willett, the VP of Research and Analysis at MPF Research. And we're going to look at some third quarter U.S. apartment market data today. So, Greg, overall thoughts, thumbs up or thumbs down?
Really, thumbs up, Jay, and you don't even have to put qualifiers on it saying it was good relative to expectations or okay given what was going on in the economy. It's just flat out strong numbers.
And let's jump in with some occupancy numbers. And this is preliminary data for the U.S. apartment sector. Overall, the U.S. average is at 94.8%, up 0.6 percentage points on a quarterly basis, and up a full percentage point year over year. And let's put that in a little bit of perspective for you. In the last upcycle, occupancy was sustained at 95% or better from the middle of 2005 through the end of 2007. So the average rate in that 2.5-year time frame was 95.5%. So we're not quite back to those highs, but with this quarter's results, we did cross over that longer term norm. As of 3Q, occupancy is actually a little ahead of the average posted over the course of the past decade or so. So, Greg, this is an interesting story and certainly one that a lot of people were watching. With all the news, the economy seems to now be headed in the wrong direction. Yet, the U.S. apartment sector actually posted another solid quarter for occupancy growth. So, are you surprised at all?
Not really, Jay. We really did expect the demand numbers to be okay. We've talked about before that while we're not producing a whole lot of jobs, the ones that we are adding are going to young adults who are the prime renter audience. And then also at the same time, we're delivering such a small block of new product that it doesn't take a whole lot of demand to exceed that number, pushing occupancy on upward. If there was going to be any vulnerability in this quarter's numbers, I would have thought it would be on the rent side.
And let's look at those rent numbers here and give you another chart. And you're going to see further good news for the apartment sector. Effective rents for new leases went up 1.6% during third quarter, and that brings year-over-year effective rent growth to 4.2%. So we're right back to the highs seen in the last cycle. We saw that level of growth in the first 9 months of 2006. So, Greg, as with occupancy, very solid results there with rents.
They are really solid numbers. And again, this was the part I was a little bit concerned about. As I talked to operators throughout the course of the quarter, they were clearly getting a little bit nervous, and that can make you somewhat conservative on the pricing strategies. But final bottom line results, they clearly looked at what was happening with their properties in terms of occupancy and the flow of people coming in the door to rent. And so they were pushing up the rents for new leases. And I will point out those are rents for new leases that were pricing there. They did get a little bit more conservative in terms of the renewal pricing for folks who have leases that are expiring at this point. But I wouldn't even say that's a crack in the overall performance because, again, it was a conscious decision. Let's be sure we've got the occupancy moving ahead at a time when we feel like there's a little bit of downside risk in the market.
So overall, very solid results, but here's the big question. And it's the big question that we're asked all the time, but it seems that in this current climate, it's even a bigger question, and that is, can we sustain this level of momentum going ahead?
Well, the next time we talk about this, we're going to be at the end of the year looking at fourth quarter results. It's important to realize that fourth quarter seasonally just isn't a strong quarter for the apartment industry. You usually have occupancy backtracking a little bit. Operators are not very aggressive on rents during fourth quarter, so no news is good news will be the story. We're looking for really a zero revenue change performance in fourth quarter, so just holding on to what we've gotten so far during the course of this year. Now, as we look ahead to 2012, it will be an interesting year. I'll point out the run-up in starts that we were expecting this year didn't come through to the degree we perhaps thought it would. Another year of really low new supply numbers, so it's not going to take much demand to keep up with that and keep occupancy really high. The question mark's probably the rent growth number, but I'm pretty optimistic there as well, although we have downgraded our forecast a tiny bit compared to what we were saying previously.
Well, for 2012, there, Greg, I got two words: presidential election.
Yeah, that's an ugly situation that we're going to have to face there. And it was interesting at our recent Southeast Apartment Markets conference. We polled the audience on what's the number one danger for the apartment industry immediately ahead. And they said the decisions, or really lack of decisions, that we're going to get from government policymakers and just the noise out there in terms of what's happening with the economy is going to be so great next year that could make some folks nervous. And really, one of the reasons we downgraded the rent growth forecast a little bit is not just those downward revisions in employment growth, but we're just leaving a little bit of room for people to freak out to some degree.
Sure. Well, for all of you in budgeting season right now, if you don't hit your budgets for 2012, just follow Greg's advice. Blame the government. It's a popular and proven strategy. So that wraps up our discussion of 3Q 2011 U.S. apartment market performance. Next time, we're going to start our look at individual markets, and we're going to start with perhaps the biggest surprise of third quarter. Los Angeles, of all places. Very, very impressive results, and we're going to talk about that next time. So until then, for MPF Research and for Greg Willett, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.